Hello to all DeFi community members. I'm going to introduce you a totally new stablecoin design paradigm, TiTi Protocol. TiTi is an elastic algorithm stablecoin backed by the multi-asset reserve and based on the Monopoly-AMM. Okay, in this page, I will brief the history of stablecoin and TiTi's birth. Let me start by presenting a brief history of stablecoin in blockchain world in time order. The earliest stablecoin is USDT issued by a company called Tether. In my opinion, USDT is a semi-decentralized stablecoin. Later on, the first generation of crypto-native stablecoin is DAI, issued by MakerDAO. DAI has the largest value in DeFi world as a native stablecoin. In the first half of 2020, multiple elastic supply algorithm stablecoins surged up. All these stablecoins are very creative. However, their market performance and stability are not expected. The past few months has witnessed some other stablecoin innovation. For example, the Fade, Float, OHM, Reflexer. TiTi is none of the above. TiTi is a new paradigm of stablecoin design, an elastic supply stablecoin with multiple assets reserve and built on M-AMM. Why we choose stablecoin? The stablecoin as a whole has a market cap of over 100 billion nowadays, and the proportion of the crypto-native decentralized stablecoin is rather low. Although the demand for them is very high, their needs are far from being met. That's where there are a potential market opportunity here. Many innovative projects happened in stablecoin market track, and we have seen that many projects in the past have with very high value. Our team is deeply involved in the stablecoin track, and they believe that in the stablecoin track has the great potential. And according to our forecast, the market cap will grow potentially in the next 3 years to about 200 billion, and hence there will be a room for almost 100 billion. As a new native algorithm stablecoin, TiTi will fill the gap. In this page, I would like to talk about existing problems and how TiTi will be the solution. Because TiTi is following the trend and solving problems that Fei and DAI and others cannot. We just talk about the market potential and the history of stablecoin. Now let's review the problems. That's why we designed TiTi, because TiTi is trying to solve all the problems. As we can see in lane 1, all these types of stablecoin are fiat custodial stablecoin by centralized company or institutes. Risks exist that the centralized authority issuing fiat collateralized stablecoin is not fully collateralizing them. The reserve are a black box in between the solvency audits. Fiat collateralized stablecoins are also subject to regulatory risks. This can take the form of blacklisting accounts, mandatory KYC, or others. This poses a potential risk to platforms that integrate with them. Let's move to lane 2, the over collateralization. We saw this type of stablecoins like DAI, the LUSD, and the SUSD. Their capital efficiency is rather low. All supply requires an excess of collateral for sovereignty, which limits the growth of decentralized stablecoin. DAI even has a debt ceiling of 66.7%, which cannot be exceeded. In lane 3, we can see what has been called the unreserved elastic supply algorithm stablecoin, including ample force, the basis USD. These projects have achieved good exposure due to Ponzi structure in the short time last year, but in fact the results are not very good. We believe that the core problem is that there are no real reserve at all. It's really difficult to maintain a stable consensus merely based on the trust of users in the algorithm. Moreover, such projects often have very complex mechanisms, high user cognitive costs, and poor use in the whole DeFi ecosystem. Okay, in lane 4, the most promising stablecoin and innovation stablecoin are stablecoin with reserves. We deem that the current hotspot for stablecoin has reached to stablecoin with real reserves, like a real central bank. The track we choose an algorithm stablecoin that combines a reserve mechanism and an elastic supply mechanism, for example, the fee, the flex, and float. These stablecoins have achieved good attention as their respective circulation in a short time is impressive. We have to admit that there are crucial problems. For instance, Fei has fallen into an embarrassing situation due to some problems in the startup method, but it has proposed the PCV. These thoughts are very forward-looking. In our understanding, PCV is actually a kind of a protocol reserve, and the protocol can use this part of the fund to adjust the stablecoin price. After the above analyzing the competing products on this track, we found that they all have a fluctuation reserve assets unstable the stability of the system. Hence, we proposed the TiTi protocol. Compared with some of the projects just mentioned, it has several advantages. It's more decentralized, open, and transparent. Mm, it has higher capital utilization and a much more stable, efficient. And it has a stronger ability to resist the market volatility risks. TiTi is able to solve what a DAI, Fei, and other cannot do. Okay, in this page, I will introduce the major innovation brought by TiTi Protocol. In the following sessions, I will start to illustrate how TiTi will stand out as a new stablecoin. The TiTi Protocol provides a state-of-art solution to resolve the above problems in the existing stablecoin. The protocol includes the four innovations. The Monopoly-AMM. The new This is a new design paradigm for algorithm stablecoin. It's responsible for capturing the real-time supply and demand relationship of TiTi and dynamically adjusting the circulation of TiTi. And reorders. This is the core mechanism for controlling TiTi's price to remain stable in TiTi protocol. It is built on the CFM constant function money making, which greatly reduce gas consumption while realize the price stability with utmost efficiency. So together, the Monopoly-AMM and the reorders can realize a primary market for TiTi and also can make TiTi stable as a whole. The third innovation is market making fund. What is a market making fund? We will call it the MMF. The Decentralized Yield Farming Fund introduced a new game relationship to the system and enhance its anti-risk ability. And we design a new investment subject based on the characteristics of the protocol. Because through MMF we introduced such a game relationship, we not only optimize users' experience but also can stabilize the market volatility risk of reserves, and enhance the robustness of the protocol. Last but not least, the multi-asset reserve portfolio. In TiTi Protocol, reserves are composed of a variety of funds. TiTi Protocol adjusts the composition of reserve assets through community governance to enhance risk resistance. At the same time, we also designed a set of modules based on the on-chain governance to actively control the composition of reserve assets to enrich the means of the protocol deal with the risks. And in the following pages, I will illustrate all these four innovations one by one. But let me start by introducing the technical architecture, because TiTi's DevNet is going on well and the testnet is under heavy development. The diagram shows the overall of TiTi's architecture. The four innovations mentioned already available and here, M-AMM and others can work together to make sure TiTi always pegged to $1 and they realize the price stability. MMF helps to improve the robustness. There are other modules that Renity found is useful for extreme situations. In secondary market, arbitrageurs equalize the spread in the whole DeFi system. If you look at TiTi in another angle, TiTi can work as a DeFi intermediate component. As we can see, there are three roles in our protocol. Through these three roles, and the TiTi protocol is integrated into the DeFi ecosystem. Role 1 are users who, in our protocol, who have demand for TiTi. These users obtain TiTi tokens through the transaction in M-AMM or the secondary market. The second role is the individual investors, which are potential participants of market-making funds. The investor obtain new value of the protocol generated by M-AMM during the market-making process by staking their crypto assets into the market-making fund. And the part of users can also be some of the yin aggregators. As for sources of the added value of this protocol, I will talk about in details below. The third most crucial role is arbitrageurs. As TiTi circulates, multiple secondary markets will be formed in the market, in Uniswap, in SushiSwap, or in Curve, etc. There will be a price difference among these secondary markets and the primary market mentioned. In this case, the arbitrageurs will flatten this part of the price difference so as to ensure the price of TiTi is entirely in the entire DeFi ecosystem is relatively stable. Meanwhile, we also set up a risk reserve called the Renity Fund to deal with potential risks in system. I will elaborate on the four core mechanisms respectively. In this page, I'm going to talk about elaborate on the M-AMM definition, its function, and what can be achieved. M-AMM is designed to mint TiTi, detect real-time price change to dynamically adjust TiTi supply, thus realizing the price stability. First, let's introduce the monopoly market making mechanisms in traditional finance. A monopoly market maker is a market making mechanism adopted by NYSE, the New York Stock Exchange. It's also called the specialist system. That means only one professional market maker is allowed to make a market for a certain security. The purpose of the Monopoly-AMM is reasonable. It can not only provide a necessary liquidity for the market, but also enable the market to always be rationally guided to avoid unnecessary panic. So M-AMM is a online decentralized monopoly automaking market making mechanisms. Let's see the picture from the right to left. TiTi mint and redeem from the M-AMM, and the M-AMM detects the supply and demand. If there are some price changes, M-AMM will readjust dynamically to realize the stability. On this footing, we designed and developed a decentralized on-chain monopoly market maker component to achieve a TiTi primary market. This market maker always sells and buybacks TiTi at a price of $1. Everyone can use it. You see here. Their crypto assets permitted by the protocol can be exchanged to TiTi in M-AMM. This process can also be understood as the process of the TiTi mint and redeem. Now let's see the price chart left. The green color above $1 indicates that the demand exceeds the supply, so M-AMM will mint more TiTi according to the amount calculated to achieve rebalance, vice versa. That's why we choose the Monopoly-AMM. Monopoly here means specialized. In most street idea, the market maker should have absolute control to mint and redeem right to reflect real market supply and demand without being wrongly influenced or impacted. As a DeFi stablecoin, TiTi will have secondary market. Their price varies, and price spread between the primary market and secondary market will be flattened by the arbitrageurs. That enables M-AMM to get TiTi global price in DeFi system. In summary, M-AMM is the core module to mint and burn TiTi, detect the TiTi real-time supply and demand, and dynamically adjust the TiTi supply with the reorders. So in page 6, I will help you go through reorder mechanisms. Okay, let's have a look at the reorders. Reorders realize the price stability via reshaping trading order book to give holders confidence in any cases by effectively and timely adjusting the transaction depths in LP pool or the market making liquidity. Essentially, reorders are one efficient market making strategy built on M-AMM. It's designed to adjust the market liquidity in TiTi Protocol. I just mentioned that the protocol needs to ensure TiTi is always sold at a price higher than $1 and TiTi is always bought back at a price lower than $1. So let's firstly look at how M-AMM works in the traditional order book based trading markets. On the left side is the reorder based on the order book. Take TiTi and USDC M-AMM as an example. In the initial stage, the protocol provides a symmetric order book based on $1. When the TiTi price is bought up, there will be a gap in the order book in the selling direction. To be simple, M-AMM are selling TiTi in the last market making cycle and obtain a little bit more USDC here. This part of TiTi is transferred to users and become the market liquidity. Hence, the M-AMM judges that the market is in expansion stage and the demand for TiTi is increasing, so more TiTi is mint. The depth of the sell order is increased, and the user's trading slippage becomes smaller, which brings a better trading experiences. But on the contrary, at this time, when the price of TiTi is less than $1, it will leave a gap here. In the order book of the buying order, at this time, M-AMM buys back TiTi with the accumulated USDC in the previous market making cycle, and the market is in a contraction stage. The demand for TiTi is getting smaller, so the project will withdraw a part of the selling order, burn a part of the TiTi, and reshapes the order book according to USDC left in M-AMM. That is how the price returns to $1. We call the reshaping process of the order book the reorder mechanisms, which is also the core reason why TiTi can continue to maintain at $1. Since TiTi Protocol is a completely decentralized protocol, we have learned from the CFM constant production, constant function market making to achieve to make the reorders possible. After each round of the market making cycle, uh, according to above principles, readjust the number of TTs in the market making pool to achieve the same effect. Reorder is very effective in keeping TT pegging to $1. What are the conditions reorder is triggered? In TiTi Protocol, we have set 3 events for triggering reorder mechanisms, including the fixed time period trigger, the fixed spread trigger, and MMF update operational trigger. Through reorder mechanisms, we have achieved a very key fact, that is, the protocol is always selling and buying TT Pro according to the changes in supply and demand relationship in the market. This gives a user a great confidence and guarantees that the stable efficiency is extremely high. Compared with the rebase mechanism and algorithm stablecoins, the reorder mechanism is more elegant. It can effectively ensure that the system is not affected other TTs in circulation during the process of adjusting the market supply, which will greatly increase the ease of use of the system, and also it helps reduce cognitive costs. Uh, to help you better understand the reorders of M-AMM, we extracted 2 concepts, the PAV and PRV, that is protocol value and protocol added value. PRV is 100% used to buy back TT mint as nature of reserve. The original value of TT is used to ensure that there will always be sufficient funds to buy back TT from the market for $1 during the contraction phase of the protocol. PAV is short for the protocol added value. The most vivid explanation is that users pay a little bit of tax or transaction fee when they choose to mint and redeem TT in M-AMM. The tax is perpetual, that is PAV. A part of the fund in M-AMM changed according to the user transaction. Whether mint or redeem, each reorder comes with the growth of PAV. PAV is mainly allocated into the 3 aspects: as a source of income for the market making funds, a reserve as a rainy day fund to deal with the risks that may occur in the future, and a governance incentive for protocol used to buy back our governance token. This is introduced in the governance chapter. Here is an example to how to illustrate allocation processes in the buy or mint condition. Take Alice as an example. When Alice spends about 10,000 USDC to exchange TT in M-AMM, assuming that the relationship between amount of USDC and TT in the pool is 1 on 1, that the price is $1. Due to the transaction slippage, Alice can get 9,999 TTs. The product received 10k USDC, of which the 9,999 USDC flow to PRV used to buy back the part of circulated TT, and remaining 1 USD was allocated to PAV as for future distribution. In sell or redeem processes, correspondingly, when Alice sells the 9,999 TT she will now get about 9,998 USDC. The protocol will use the 9,999 USDC reserved in the previous PRV for payment and assign 1 USDC to the PAV, because the purpose of the previously reserved USDC is to ensure that the original value of the 9,999 TT obtained by Alice is not less than the average price of the $1. So this part of the PRV can be released when the protocol is buying back the part of TT. The process reflected in the reorder process is shown in the right side. Through reorders mechanisms, a very important effect is realized. The amount of TT circulation is always equal to PRV amount. And at the same time, it ensured that each time the protocol readjusts the amount of circulation, the original value of the TT in circulation will not be affected. Compared with impulse rebate mechanisms, this brings a better user experience too, and at the same time, it is more fair. Okay, in page 8, let's have a look at the market maker fund, MMF. With market maker fund with M-AMM reorders, TT is able to realize a stable status. And what is M-AMM for? Here's the answer. To put it simple, for investors, MMF is a decentralized, low-risk, single-asset yield farming product. It is also an asset-based fund issued by protocol with part of the PAV as a source of profit. For example, if you stake 10 Ethereum in Ethereum and TT M-AMM, you are farming HH in the PAV because you are providing liquidity to M-AMM. For each reorder, you can get the HH as rewards. By the way, you are also mining TT at the same time. We designed this product mainly for the following 3 reasons. One, to raise more market-making funds to reduce the user trading slippage. Two, to stabilize the impact of volatility of reserve assets and enhance the robustness of the protocol. 3, to experiences of the MMF participation process is also inconsistent with the yield farming logic in current DeFi ecosystem, which is helpful for the operation and promotion of the project. The investors' participation process is similar to other DeFi yield farming products. Users only need to stake their crypto assets specified in the protocol into MMF. Each time someone new in MF participant in MMF will automatically trigger the other mechanisms to complete the profit sharing of the previous MMF participants. And then according to users' stake amount, the time amount, equal value TT will be mint, and then the TT will be injected into the corresponding M-AMM, making the depth of M-AMM greater and the user's transaction slippage smaller. With the subsequent operation of the protocol, each reorder triggers settlement of the fund. Part of the PAV generated by this round of market making is allocated to MF participants according to the amount of time of staking. Okay, now we come at the most interesting subject, multi-asset reserve. MAR or MAR. MAR is designed to enrich ecosystem diversity or the diversify in diversity the resistance to volatile risks and break down the ceilings for stablecoin issuance as well as generating alpha yield. Multi-asset reserve Multi-assets reserve refers to the mainstream cryptocurrency such as the Ethereum, WBTC, USDC, DAN, etc. Why multi-assets? Because the trend is here. Multi-asset collateralization is heated discussion for MakerDAO. If everything is going well, DAI will announce their support for multiple asset collateralization in the near future. So will many other DeFi projects. TiTi is inherently born with the function supporting multi-asset reserves. Theoretically speaking, any mainstream assets can be deemed as a targeted reserve for TiTi Protocol. It's only a matter of time. With MAR comes multiple M-AMM. Users are free to choose whatever they prefer to mint and redeem TiTi because TiTi Protocol adopts global price from the system. The first innovation of TiTi Protocol lies in the active adjustment of the multi-asset reserve portfolio. Through the above three mechanisms, we have brought the system of the possibility of expanding multi-asset reserve because as long as we are based on the reserve of type of the assets can be expanded by setting more multiple M-AMMs, then we can make a fine allocation of the accepted reserve types, which not only reduce the single point of risk but also capture excess returns and at the same time increase TiTi's upper limit of insurance scale. This part of the income will be allocated to rainy fund to deal with the risk of a protocol. We're also considering introducing the way of community governance by adjusting the number of the various assets to deal with different market make the patterns. For example, when the market is in a bull market, and we will increase the proportion of volatile assets such as Ethereum to capture more value. When in bear market, we reduce the proportion of volatile assets to reduce the risk of the system. I think now we have a better understanding of TiTi Protocol. To sum up, TiTi is a multi-asset reserve stablecoin based on M-AMM, original reorders, M-AMM, and other modules. Okay, in this page, it shows our test and simulation related. After all the above illustration, let's see some data support. To verify TiTi's mechanisms, we did a relative rigorous backtest analysis of the above mechanisms. We used the changes in the circulation of DAI in 2020 as our data source to simulate the changes in users' demand for TiTi. And look at the first chart. The orange curve stands for TiTi price fluctuation without MMF, and the green curve stands for TiTi price with fluctuation with MMF. And the second chart, the curve stands for the amount of PAV for a whole year. It's around 12 million. So the result shows that with the issuance of TiTi, the slippage of user transaction in TiTi primary market is reducing. see figure 1, the yellow, it turns out that MMF can effectively reduce the slippage. With the issuance of TiTi, because of full reserve, the prime market depths will be enlarged, the slippage users will become smaller and smaller, and TiTi system will be more stable. At the same time, the cumulative number of PEV is very objective, which also means that the protocol can accumulate enough rainy day fund, and return rate of M-AMM is very high. In page 11, let's see another test and simulation on the multi-asset reserves. How can MAR resist to risk and bring extra revenue? Except for the backtest, that we've done another test and simulation on the effectiveness of multiple asset reserve. This graph simulates the impact of different reserve asset composition of the protocol. Another calculation is how the introduction of a multi-asset reserve can enhance the protocol's stability to resist to volatile risks. In figure 1, it shows 3 different price performance if a stablecoin is backed by an Ethereum alone, USDC alone, and Ethereum and USDC together as the reserve. The chart indicates that MAR is far better than the reserve of Ethereum alone, with a well-rounded packing situation for most time of the year. It's much better than fee and frax, indeed. In figure 2, RR is the ratio of total reserve against the TiTi in circulation. You may regard it as TiTi's mean and average price. The results shows that the introduction of multiple assets can effectively reduce the single point risks of the protocol, which also obtain good excess returns. With a multi-asset portfolio, DAI estimates that TiTi can quickly pull back the price. There will be a RR dashboard shows that the total amount of RR in circulation, and as Ethereum drops, it is decoupled, but it might go up in the long run quickly. The RR of Ethereum's rise is far greater than 100%, and the user's credit is huge, and it can be exchanged for $1 at any time. Alright, after all the tech and the product illustration, let's view TiTi's governance. In terms of governance, TiTi will issue a total of a billion governance token TTG, which will be used for many two purposes: the online on-chain governance and incentives. The first is for community governance to adjust the key parameters in this system, including the reordered condition, and adjust the ratio of each reserve assets, and adjust the distribution and allocation of PAV. The second part is the TTG encourages some key users' behavior in TiTi Protocol to create the initial usage scenario for TiTi. For example, TiTi mint and redeem at M-AMM, join the market making fund, and TTG liquidity providers. They all will be incentivized by the TTG token. In page 3, let's have a look at TTG token economic. In a nutshell, we can see here almost 75% of the TTG are distributed to community, 50% for fundraising, and 10% for team allocation. In page 14, the competitive advantage of TiTi is listed. Alright, first and foremost, the TiTi shows much higher capital utilization rather than the collateralized type of stablecoin. In terms of price stability, TiTi stands out with original reorders and M-AMM. As TiTi is backed by multi-asset reserve and effective reorders, it shows strong confidence and credibility to its stakeholders. Meanwhile, despite of the complex coding and engineering of realization, TiTi Protocol presents users with the most elegant ideas of stablecoin issuance and concise product design. All this is to make TiTi easy to use and reduce cognitive cost for general public. Last but not least, the TiTi protocol is the most sensitive to real-time supply and demand. It can adjust the stablecoin supply timely, effectively, with unprecedented mechanisms. We never see something else in the market. Okay, in this page is the roadmap. Actually, in last December, we start background research, mechanism design, and protocol deduction and simulation. And for the past 6 months, we do a lot in preparing all the materials and the product design. In Q3 quarter 3 2021, we will launch the testnet and further improve the protocol. And we are going to increase our community members into 10,000. In 2020, in Q1 2020, the mainnet launch on Ethereum. USDC will be introduced and will last for 2 quarters. TiTi will reach a market cap of 50 million. In Q3 of 2020, volatile assets will be introduced, the ETH, WBTC, and DAI, etc. TiTi will reach a market cap of about 200 million. In fourth quarter 2020, it is expected to create more usage scenario for TiTi and amplify the demand for TiTi because the team has a particularly deep understanding of ecology and is very familiar with the lending, NFT, and etc. We can achieve a billion TiTi issuance, and TiTi is better integrated into the whole DeFi ecosystem. TiTi, okay. In summary, TiTi is a totally new stablecoin design paradigm. Its mission is to solve all the problems in current crypto-native stablecoins.